All right. Hey there. Good morning, everybody. It is a thundering, lightning, raining morning here in the Houston area. But it's just after 11 a.m. Central Standard Time on Friday. What is today? The 22nd of August. Jerome Powell Jackson Hole Speech Day. I hope you guys were prepared for that. 2025. Before we get going on here, do me a favor. Hit the thumbs up. Hit the like. Share the link, guys. Do me a favor. Share the link, all right? Leave a comment, all that fun stuff, unless you're a jerk, in which case I'll just block you. I ain't got time for it. One of my favorite things people say is online is, oh, you're weak if you block or something stupid like that. I'm like, no, actually, blocking people means you don't give a, right? I mean, seriously, what do you care? You block somebody, right? Why let trolls get out there and act like trolls and reward them by allowing them to do it? I think it's something that a lot of you guys don't get. Why allow it to happen? It's like if you're walking by and some guy was beating down a girl and you just sat there and watched. You let it happen. It's the same nonsense, right? Why condone bad behavior? Oh, man. Thankfully, I don't have too much of that anymore these days. Most of the trolls have moved on, probably because I don't really give them much of a chance. I tend to block them. But, and there's also, I've got a record of how well I trade, publicly over the last, going on 8 years or so next month. I guess this year is 8 years. So we got a lot of that going there. Listening from Portugal. All right. Glad to have you listening in. Oh, man, I want to say your name so bad, but I think I'm going to really screw it up, and I hate screwing up people's names. But let me see here. Is that I really don't know. Is it Zhao? Is that how you pronounce it? Oh, I hope you just are nice to me and you say, yeah, sure, that's it. Understand that I'm trying. I am trying. Anyway, so good to see you there. Let me see here. Funk checking in from Lithuania. Nice. I know Mark's over there in Canada right now. Xander, you're in Canada as well. Very cool. Very cool. It's good to see y'all here. Oh, I said your name right? Fantastic. And man, I'll pay you later for saying that I said it right. No, I'm kidding. Roy, what's going on, man? My 7th favorite snow Mexican. You guys are great. Oh, who else we got here? We got Carnivore Soldier, man. I love the name. Well, and you're from Texas, my man. What's up? Gotta love it. Gotta love it. We love a carnivore lifestyle down here. Grilling and smoking is a way of life in Texas. Just deal with it, right? Klaus, what's up, man? Glad to have you here. Spiral, I see you, buddy. Spiral's been following me. Had been a part of Texas West Capital for a very long time. So anyway, listen, guys. Man, oh, man, what a morning, right? Hey, Data, I see you there too, buddy. My favorite German right there, Data. Checking in. I think everyone's in a blessed mood today, Funk says. I think you're right, man. I think you're right. Everybody's feeling pretty good. And this is, I've said it a little bit publicly, but really said it a lot, to our members over at TWC, which was, this week we could expect, maybe some sideways, maybe some pullback, de-risking going on into the end of the week, into Powell speaking today. And so, man, oh man, we got that, right? We got that. And I'll tell you what, if you're in TWC, if you're in the Liquidity cartography group, that's our group coaching. That's where we kind of teach you everything you need to know about markets and trading. Not this stuff everybody else, regurgitates something. We teach you real stuff. But we do the live trading 3 days a week. And I've been trading. I teach them also how to pass the prop accounts. I've passed 5 or 6 since April. And then just today, I bring this up because if y'all are over there and you haven't noticed yet, check the chat in the live trade. I passed we were doing Top Step this time around, the $150,000 account. So I passed that, and I've got that one now in there as well. So we're going to test that out and see how well they pay and see if they, give you a hard time and whatever. And it's just our way of kind of, first of all, helping people understand how you trade on those short time frames. We're usually trading like the 1 minute chart. And then also, kind of teaching our people, listen, if you want to trade prop accounts, this is how you have to trade them, because it is different than trading your account the way you would normally do it, because the rules are much more strict. And then also, I do it because I test out the different prop trading platforms to see, how difficult the rules are, and whether there's a difficulty, getting paid from them. So I do that, with our students as well. But anyway, just past that one there, went ahead, and so I'm on that. Right now, we're doing Top Step, and Top Step is actually regulated by the commodities board over there. And so I went ahead, and there's a 3-phase thing. Basically, you get your first phase where you have to go in there and you have to pass, right? So if it's a $150,000 account, you got to make $9,000, and you only have a $4,500 threshold below you. You go below that, you blow your account, right? So got that. And then it puts you in the express funded account thing. And with that, you're still sim trading, but you can request payouts after you have 5 winning days of $150 or more. And you can request up to half of what you've made, up to a limit of $5,000. So basically, you could request, if you were to make $10,000 every 5 days, you could request $5,000 every 5 days. Anyway, so you do that, and for that's where I just got in with this one. And then the next step is the live funded account. And it's actually a live funded account, guys. And so with that one, what you have to do here in this particular one here, I think you have to have like 5 payouts. Now, their risk board can choose to push you up into the live funded accounts before you have 5 payouts, if they choose. Or I think they can maybe take a little bit longer as well, depending on how they feel you're doing there with the risk and everything. But then you get to the risk one, and that one gets interesting, because when you get up to the live funded account, you're playing with real money at this point. Your sim counts with the first one, your sim counts with the first one, which is the combine, your sim count with the second one, the one part I'm in here, which is the express. And then you get to the live funding. The live funding is interesting because you can request 100% of your payout, but after 30 profitable days, they don't have to be consecutive, just 30 days where you're making $150 or more in profit. What is it? You have, there was something big about that. I can't even remember now. You can request daily payouts up to 100% of your profits, daily payouts. So, if you've got a $150,000 account and you're trading, at some point 30 micro E-mini contracts, or 60, right? 60 is $300 a point. I mean, you can make just by 10 points, you can make $3,000 a day. And, if you're doing that, you could request that daily on there. So anyway, I'm liking Top Step. It's taken me a little bit to get used to it from Apex. The first few I passed were from Apex, and I got used to their system, the way they set their stops and everything on there. Top Step's a little bit different, had to get used to it. But again, doing pretty well there. So again, if you're here, I know a few of y'all are here, Sats and Spiral, and Bernardo is here. Bernardo, my favorite South American. him and Diego. But anyway, excuse me. But you guys, yeah. So we'll be back on Monday, and I'll be trading that Express account there live first thing in the morning there, guys. So make sure you check in there, and we'll see how it's going, okay? Does Top Step work for Canucks? I think so, Roy. I think so. You'll have to go check it to be sure, but I do think so. All right? So anyway, I know somebody on the other side of the world. You know who it was? It was, I think it was Alvin over in Australia that's in the, in TWC with us. Got set up with Top Step as well. So if they're doing it, I think Canada can probably do it. I don't think there'll probably be an issue there. But anyway, like I said, that's a regulated one, guys. A lot of these, just if you didn't know, a lot of these prop firm accounts out there aren't regulated. The CFTC regulates Top Step. So it's a legit firm, and you do, by the time you get to that third round, that third step along the way, you are trading real money with that. So just some stuff there. What's up, Ted? Good to see you, buddy. All right. So anyway, guys, hey, listen, Powell spoke this morning, right? And I've got my notes here. So what do we take away from what Powell said? Well, let me kind of pull this up here. He kind of signaled that interest rate cuts could happen as soon as next month. So, which is September, but he didn't commit to it. Okay. But he opened up the door there. And I think that's what the markets really kind of were waiting to hear. But he did emphasize as usual that, whether they're going to do it or not, it's going to be data dependent. So he's kind of cautiously optimistic about it. But then because of that, we saw the Fed. If you watch the Fed Watch tool over at the CME, right, that went up from something like 70% chance yesterday up to an 89.2% chance of a rate cut. That's what the markets are currently pricing in for next month. But you guys need to watch it because, silly enough, if the numbers don't look good again, like last month, that'll affect that pretty much. But, again, as Powell said in his speech this morning, he made the point that, listen, we did have unemployment and everything, kind of unemployment inch, a little bit up to 4.2%. But he said the same thing I keep telling you guys, which is unemployment's historically low right now. Like I said, usually the Fed around 5% considers unemployment around 5% considers the economy to be fully serviced, right? Fully employed. So we've been sitting below that for just one of the longest, if not the longest periods of time historically. So, again, that just kind of further emphasizes the fact that the Fed, the Fed's got the dual mandate. It has prices, and it has employment. And so employment, again, remains historically low. So that's the lesser of the two it's concerned about at the moment. The real driver as to whether the Fed's going to cut or not coming next month or when they do is still going to be inflation. All right? It's still going to be inflation. All right. Let me see here. So with that in mind, what else? Let's see here. He mentioned basically there's a tug of war between inflation and employment. That's what I talked about. He said inflation remains elevated, particularly due to tariffs. On the other hand, the risk to the labor market are growing. He described the labor market as in a curious kind of balance. He used those words. He said both labor supply and demand have slowed, which raises the danger of a sudden spike in layoffs. But again, this is just him kind of prepping you right here, right? The tariff-driven inflation he talked about. He said that rising tariffs are contributing to inflation, but he expressed hope that the effects are going to remain short-lived. He didn't use the word transitory this time around, so that was good. Still, though, he warned about the possibility of them feeding into the longer-term inflation dynamics if they're not carefully monitored, okay? Now, one of the bigger things I think that he said was they have an updated policy framework. He announced they revamped the Fed strategy. So key changes include eliminating references to the low rate environment of the past and moving away from its previous average inflation targeting approach. And so instead now the Fed is embracing, more of this flexible preemptive inflation control strategy, I guess you can call it. And finally, he reaffirmed, the Fed independence. He said, he's got all that mounting pressure, right? Political pressure, especially from Trump. But he underscored that policy decisions are going to continue to be made solely based on economic data. And again, and that reaffirms the Fed's commitment to the dual mandate and the institutional autonomy that it, is supposed to have. Okay. How many times did he say solid? I don't know. I didn't count. Do you know? Let me see here. So, of course, if you guys were in the markets, man, S&P took off. Bitcoin took off. If you're with us, or even if you've been attending these free live streams that I do, I think I've mentioned them on there, how we were looking for a potential sweep of the range low. And we got that this morning before we have this $5,000 whatever rally that we've had from this morning's swing low. So that's been good there. Let me see here. How does this affect maybe like different sectors? So if you guys are looking at maybe where to put your money in the stock market and whatnot, I think, let me see here. If we get a September cut, in rates, that should ease the borrowing cost almost immediately in the mortgage markets. And so what that means is that mortgage rate could pull back from those current highs. And that would give, the pent-up home buyers a chance to re-enter. So there's that. There could be a boost to construction because you're going to lower financing costs, and that could spur on the new construction and refinancing activity. And that'll be especially for those builders who've been squeezed by elevated materials costs. But there is a caveat to all this, okay? And so if the tariff-driven inflation, right, persists, so we're talking about lumber, steel, imported goods, stuff like that, that could offset some of those benefits, but overall would be a net positive in that area. Okay? What'd you say, Mark? I was off by less than $250 to calling the low on Bitcoin? Well, some days you get it, some days you don't. It is what it is. Yeah, by the way, guys, Fiboswani couldn't make it here today. He is traveling, as he just said there. But we're going to try and get him on next week. We'll see if his work, his day job cooperates, and then he can be here, with us. So if he can, he'll definitely be here, guys. So don't feel like he's just leaving you. But what else? Tech. Listen, tech's been the workhorse, right? It continues to be the workhorse. Growth stocks love lower rates. So if we were to get a September rate cut, tech, especially the high growth names, they're going to tend to outperform when yields fall. That's what generally happens. Because future cash flows are going to get discounted by less. Okay. So that dovish tilt that we got from Powell today is bullish for mega cap tech and AI driven firms. And so if you've been paying any attention for this year, especially, the driver for, the stock market has been mega cap tech and AI. So, again, looking like that's going to continue going up there, right? Hey there, Bobby. Good to see you, bud. You're tuning in from India today, my man. Good to have you in here, as always. Now, what does that mean? Well, the cheaper borrowing then, if we can get that September rate cut, there's a good possibility that that's going to encourage semiconductor and cloud infrastructure expansion. And then and the reason why being that the financing cost in that area weighs really heavily on project planning. So if we can get a September cut and rates come down, that obviously makes it much better, for that particular industry to get going there. So pay attention to that. We saw yields already dropping today after Powell's remarks. So if the curves if the cuts do materialize, we get them next month, we could probably see further curve steepening, which just basically means that the short end is going to drop more than the long end. Credit markets, corporate borrowers are going to benefit from lower financing costs. Again, what we're talking here. And that should support high yield issuance and refinancing. So credit spreads could then compress. But I think you're going to have to watch the labor market at that point when you're looking at the credit spreads, if they're going to compress or not. Because if that labor market weakness gets worse, like we just see a continuation of what we saw last month, I think that's going to have an effect on that, on those credit spreads there. So there is that, right? Of course, if inflation, ends up being stickier than what Powell is hoping for here, what does that mean for bond markets? Renewed volatility from inflation repricing. So you have to be careful with that. Let me see here. As far as a broad impact on equities, I've got cyclicals versus defensives. And so if we get the soft landing narrative, right, that's where the Fed cuts, but the economy continues to hold. That's going to favor consumer discretionary and industrial. So that's where you're going to want to look to maybe put some money. But if the job market, again, we're talking about the job market, if it continues, right, if the stuff from last month continues this month, and especially into the next month, right, you're going to be wanting to look at defensives like utilities, staples, healthcare, stuff like that, because there's a good chance they could regain leadership in the markets. When it comes to financials, if rates drop too fast, then banks are going to face that margin compression. But relief in credit quality, which is fewer loan losses, would end up acting as a cushion. So you can watch that as well. Let me see here. So we're talking about this tariff link to inflation, right? And, you've got Powell out there saying, yeah, that's a part of it. But you got a lot of people out there saying, no, inflation really isn't a part of this. But if it is a part of it, if the tariffs are a part of the reason why inflation is staying sticky, right, or rises or whatever, raises, goes up, and that persists, then September cuts, for instance, could actually fuel commodity demand. And then you'd see energy and metals going up, most likely, with something like that. And then, of course, rate cuts typically are going to lead to a weaker dollar. Dollar's falling off a cliff this morning. No surprise there. Again, I've been talking about the continuation of the dollar dropping for quite a while now. And so we're just seeing more of that follow through there. But a weakening dollar potentially supports oil and gold prices. But oil, I think, is not just straight up with gold, right? We've been seeing a bit of divergence. If you all subscribe to the Market Breakdown, my daily newsletter, we've been talking about that in there daily, right? There's been a lot of mention about how, you've got this movement into gold or whatever, into precious metals, but oil wasn't going with it, right? Oil wasn't going with that, and what that actually means. So you can sign up for that, guys. It's a free daily newsletter, themarketbreakdown.com, and you get all this kind of information in there and whatnot. But so overall, I think, housing, tech, those are going to be by far like the clearest beneficiary of any kind of pivot that we get here, of this dovish pivot we're getting, right? Fixed income, maybe expect a rally, but you're going to have to continue watching that inflation headlines, right? And so at the end of the day, then, with all that in mind, what's the trajectory of the labor market? That's really going to kind of decide whether it ends up being, a soft landing, which is going to be good for cyclicals, or, a pre-recession easing, I guess you could call it, right? Which would be good for defensives. So, I mean, that's kind of the way you should be looking at it generally. If you're not just looking at charts, but even if you're looking at charts and you trade charts, you don't worry about narratives, you can at least use this as a kind of a map of what charts you should be looking at, right? Again, biggest thing I think is you continue looking at tech and you look at AI companies, with what we're seeing here, especially if we get that cut here in September. All right. So that's kind of where I'm at with that. Let me see here. Oh, why don't I have my chart set up here? Give me a minute. Let me see. We'll look at Bitcoin first, because I think y'all maybe are excited about Bitcoin, right? Yes? Yeah? There we are, guys. We got the very slightest of a wick printing a spring there, right here below this range support. As I've been talking about, this was reaccumulation. This becomes our jump across the creek. Our show of strength pulls back into a back up the edge of the creek, rise up, pulls back again into what appears to be a spring similar to here, which means we should expect this to break out higher. Now, based on the height of this pullback, the widest point of this overall pullback here, that would give us a pattern target around 132,350 or so. Now, it doesn't mean that's where it has to stop, but it just means based on the height of that pullback, that would be our pattern target, 132,340, 132,350. This is the Bitcoin all-time history index chart. So similar to that, depending on what chart you're looking at. But man, oh man, it's a beautiful move up here this morning. You can see this nice big bullish engulfing candle. Let's see here. There we go. Big old beautiful engulfing candle. We're back up here, crossing bullishly above neutral, threatening to cross bullishly on the SMA, on the daily RSI, daily stochastic RSI. Reset down here and oversold, cross bullishly, threatening to break out of oversold. So, I mean, the setup's there. We're back above the monthly pivot. We rallied up into the EQ of the range. So, again, looking for that to rally up higher there. I think that's what we get overall on this. This morning, we've actually rallied total from the swing low this morning. $5,480, guys. Almost 5%. Almost 5%. Can you believe that? What a morning. Fibbo let you guys know that 117,000. So he says for his threshold theory, guys, if your 4-hour candle closes above 117,000, that's going to be his bull zone. So there you go for that. All right. Let me see here. Ethereum, probably the second most thing that you guys are kind of looking at here, right? Remember, we've still got this trade from down here at about $1,587 with a target up here of around 13,606. So that, you know, if this trade does play out, that's a 57.6 R, which is amazing. Again, right here, this looks like a pretty clear spring rally up here. And we're inside this larger range as well. All right. I haven't really zoomed in here. It's possible, looking at this right here, this could be a triangle. This could be an A and a B. Let me see here. Swing high is 4,090. Swing high over here is 4,100. Okay, so it'd have to be B there. And then C, and then D, and E. So I don't know that that's what it is here at the moment, but it is possible that this could be a triangle here. And if it is, our pattern target would be based on the height of the triangle there. 13,770 right there. Just a little bit above our 13,600 target with that. That would be the pattern target. All right. So that looks good. Locally here, let's zoom in locally. So we've got what looks like a 1-2 and then a 1-2 here. So this as a 1-2 has a minimum expected wave 3 target right about where we're at. So we'll see if we get rejected here and kind of pull back down toward 4,500, 4,550, this area here. And that would give us a 1, 2, 3, 4, and then a 5. Which gives us an overextension for this larger 1, 2. Because right now we're at that 3. Let me see here. Nope, I'm sorry. Nope. I pulled these both off the bottom here. All right, so this is a big overextension. So you have a 1, 2, 3, well overextended beyond 2618. If it keeps pushing up higher, we'll look here around 4874 as the target area. But then looking for a pullback and then a breakout higher to give us a 1, 2, 3. We'll get a pullback on the 4, and then we'll get a 5 higher up there, probably toward $5,000. By the way, guys, remember that all-time high for Ethereum right now is sitting right here at 48.67, and we are so far today at 47.90. So basically $77 higher. And we will have a new all-time high for Ethereum. Who's excited? Maybe not. Okay, maybe you aren't. I don't know. Let's see here. Roy, what's up? He said, if questionable, if Questrade lets me trade stocks, I'm going to use that B-Bands trading strategy you mentioned in class. Yeah. If you're new and you missed Wednesday's price action class at the request of a student, I taught a new trading strategy in there that uses Bollinger Bands and something else. So you guys can go over there into the price action trading training area. Oh my gosh. And just look at Wednesday's class there. The recording's in there. And you guys get a head up on that trading strategy there as well. Or if you're new, if you decide to join us, you get access to that too. Which, by the way, guys, we still have not quite gotten through those 20 initial seats we have. We're right there, though. We're pretty close to it. But if you manage to jump in, you can get in with the yearly with us. You would have to go to members.texaswestcapital.com and sign up for the annual Liquidity Cartography cohort, and use the code TWOX, the word 2 and the letter X, so it's 2X, and you'll get 50% off for the year. And if you do the things that are required there, and you're not a measurably better trader at the end of the year, you're getting 2 times your money back. So better than even just holding on to it, because odds are you're going to lose it in the markets over the next year, or inflation's going to eat it as it is. At least this way, you get back more than 2x your thing. But it isn't simply you just go, oh well, I didn't learn anything and that's it. There are some steps you guys have to follow through, and you have to make sure you follow through them, because again, we're putting a lot of money up here based on your actions. We have to we can't just simply say, oh, you can just tell us you didn't learn it. That'd be stupid, right? Because people tend to get lazy. They don't do the things they have to do in order to learn. They're like, oh, it didn't work for me. Yeah, well, you didn't put in the time and effort you had to do. But if you do it, the information's there. You can go to members.texaswestcapital.com on the liquidity cartography page there. And what's required's on there. But we don't make it difficult. Matter of fact, we make it pretty easy. You basically have to do the bare minimum, really. But that's again, we've had such great success with our students that if you're actually doing the work and doing those things, I mean, I'll but guarantee that you'll be able to, that you'll be a much better trader, actually making a lot more money than what you are now. But, can't guarantee everything, right? But we can give you a 2x money back guarantee if you don't. So sure, you jump in there. You can see all these great people here too. Okay. You guys see the Bitcoin chart? Yeah. Oh, were you telling me that I wasn't showing you the I see what I'm talking about. I'm sorry, guys. Okay, yeah. With this laptop here, I always forget because I only use it for this. But I actually have to switch the screen. It doesn't just give me the whole thing there. Sorry about that, guys. I apologize. Let me see here. Does a good close on Friday mean a good day for crypto on Saturday? Yeah, I wouldn't necessarily say that. You got to understand, price is moving pretty strong today, right? We're up 5% already on Bitcoin. And if you continue rallying toward the end of the day, my initial thought is more likely than not, we're going to see a pullback through the weekend and then see continuation on Monday. We've had a strong rally here today, guys. That's going on there. And again, here with, here's Ethereum, guys. This is what I was talking about here. You have the 1-2 and then the 1-2. So this is 3, or maybe pop a little bit higher up here, 48.74 if we continue pushing higher. But then we're looking for a pullback down here toward this 4,500 kind of area. And then we look for one more push up. And then that would give us 1, 2, 3. And then we have another pullback, 4, and then a 5 up higher. But as I mentioned here we are, all-time high. Oh, excuse me, hiccups there. 48.67. And we're currently sitting at 47.55 now. So less than $100 off that all-time high. But again, it's possible this could be an A, B, C, D, E. I don't know how I feel about that. It's all compressed here at the end, but it's possible. And if it is, then based on the height of this pattern, we have that 13,770 target. This is the trade I've been talking about a while now that we ran down here. We got in here around that 1587 area. Stop loss just below the swing low with the target of the 13,606. And so, if this is going to be, even if this is going to be a triangle here, that pattern target's right there in that same area. Now, if this happens to actually be a 1 and a 2, then we're going to see it heading up higher than that. Up here, potentially 26,000. But we'll see how it plays out here. But even locally here, again, you get a bit of a pullback, get a rally up, pull back in, get a rally up, pull back, and then you're off to the races as a 1, 2, and a 3 heading up there. Does that make sense? Let me see here. What's up, Peter? Seth says 13K Ethereum will be rad. Yeah? But 26K Ethereum would be radder, wouldn't it? It'd be radder. Let me see here. So that's what we've got, kind of what we're looking at here right now as far as those two big ones go. I'm going to remember to change my screen here now. Boom. Now you've got the NDX, which is the NASDAQ 100, and you have the SPY, which is the S&P. And guess what, folks? This little move here today, the all-time high was, let me see here, 646.09. It was 646.19 right here. Today we hit 646.50. So we got a new all-time high on the S&P right here. This is a 1 and a 2, 3 here. We're just overextending to around the 200. So again, I could see this kind of pulling back, potentially down here around 542. I'm sorry, 642. If we get a pullback from here, and then we'd rally up here probably to around 650 or so to give us, 1, 2, 3, 4, 5 waves up for the next kind of move. Here with the NDX, though, again, you got your 1, your 2, and your 3 here, almost at the 1618. The target is 23,660. So we're just shy of that. So maybe Monday we see a push up into it, and then a pullback down here toward 424. I'm sorry, 23,424. And then we can get 5 waves up around 23,807, which gets us almost to the previous all-time high. But, looks good here. With the SPY, we actually broke back out to the bullish side of neutral, crossed bullishly. Stochastic RSI just now breaking out of oversold. And here for, by the way, these are the 4-hour charts here, guys. Okay. We got the RSI breaking out above neutral, threatening to cross bullishly here. And again, cross bullishly, threatening to break out of oversold there with the NDX. So again, stocks look positioned well overall to continue up next week. We may see a bit of a pullback, say on Monday or something like that, maybe. But overall, I think should continue up next week. Okay. Dow minis broke the resistance. Nice. What was it? The YM? Is that what you're talking about? Let me see here. Come on, catch up. Trading view is always so slow. I think I've got too many charts saved in it. Let's see here. Oh, yeah. Look at that. Look at that big, beautiful breakout. It actually hit our pattern target. So those of you, well, if you're not in the in TWC's liquidity cartography cohort, right? If you're not in there and whatnot, you don't get my market updates, my market wraps at the end of every night. And every night we're looking at the previous 2 charts, the NDX and the SPY, and then we're looking here at the futures on the Dow. So this was, we had this 3, so this WXY pullback, it looked like. And we had a target based on the height of this pullback here up there at 45,837. And today we hit 45,841. So we hit our target. I'll talk more about this tonight on the wrap there, but looking pretty good down here. I love the volume as we came into this spring area. And then the rally up and out of that since then there looked really good. So I've been talking a long time. Again, I think the Dow hits 50,000 before we have a recession or anything like that. So we're still 4,200 and a half points away from that as it sits. So I've been talking about that for a few years. We're getting near there, but we haven't quite got there yet. Let me see here. Big, beautiful candles everywhere, Peter says. Oh, man, it is, right? You guys know I'm loving the Tesla trade right now. If you haven't been paying attention, you haven't been making money with it. But, again, looking at this like a 1, 2, 3, 4 is a triangle. Wave 5 up based on the height of the triangle here. We actually have a pattern target of about 438.5. This is a 1. Looks like ABC is a 2. 5 waves up right around 432.70. So right there, 432, 438 is about where I'm looking to get right now. This is 3 waves down here. So what do we need? We need a breakout now above this point right here, above 340.55. Let me see, do I have you on there yet? Nope. Let me get it back on there, guys. I got it. There we go. Let me see here. Here we go. I got you. I got your chart there, Funk. I got it. So here's the Tesla chart, same one I've been sharing publicly, and of course with our members there. But yeah, again, looks like a 1, 2, 3 triangles of 4, and looks like 1, 2 here. Breakout above 340.55 is going to add confidence to this 1, 2. And that gives us a minimum expected wave 3 at 407.29, wave 5 at 432.70. And then, of course, like I said, based on the height of this pattern here, the widest point of the pullback, we have a pattern target just slightly higher at 438.50. So I'm looking at that. Well, here's the thing, guys, also. That's not the end of it, right? 1, 2, and then we have 1, 2, 3, 4, 5, right? So 1, 2, 3, 4, 5. Woo, that thunder's out there. So we get 5 up here, but guess what? That's 5. Then we're going to get a 3-wave pullback, and then we're going to break out to new all-time highs. And that pullback should bring us right around this area of the triangle. Let me see here. If we just get that wave 5 target, 50%, yeah. We'd be looking for likely a 50% pullback right around 304, 305. So that'd be a 1 and a 2, and then boom, 3, 4, and 5 up here into blue sky territory. So, and that won't happen if the stock market doesn't continue going on. And I've got a high degree of confidence in this being 1, 2, 3, 4, getting a 5 here. So with that being 5 up and not breaking out higher, not breaking out above the all-time high, right? If it doesn't, if we don't get an overextension, breaks out higher, it says we've probably just got a 1 here, and we'll get a 2 on the pullback, and we'll get a 3 higher, which means overall risk assets should be good to go higher. Stocks, crypto, whatnot. Does that make sense? Let me see here. It's the first time you've actually heard the weather in the background here. Normally the noise cancellation gets it all it does, doesn't it? Tells you how loud it is here. And I don't know, man. I don't know. Sometimes, I'll be honest with you, it's nice enough out here around Houston, but a lot of times I'm wishing I just stayed back near Bernie because it seems like every time it rains decently over here, the power goes out. It's so stupid. It really is. And it drives me nuts. But yeah, things we got to live with, right? But anyway, so overall, I mean, you guys, you're seeing this, and, people out there are still bearish. Still bearish. We're not bearish at TWC. Not me, not Andrew, not Vince, not Fibbo. We're pragmatic. We're based on what's actually happening. We're not based on emotions and what's going on there. Okay? So, I mean, what are you going to do? If I'm you, I'm listening to people who are much more, even keeled, that aren't so emotional, that don't think every time, you make a new high that it's the top. And you just keep saying top, and you just keep saying top for years on end. You guys know who I'm talking about there. There's a couple of them out there, right? But trading, here's the thing, guys. Being in the markets, the number one thing you have to do is proper risk management, all right? It's the number one thing. The number two thing is you have to actually learn to read the charts. I'm not talking about just simply, this strategy says to do this. Understand why. So what we teach over at TWC is we teach you, listen, here's how you can start understanding it. And then as we go through it, and when I'm teaching, I'm constantly talking about, listen, liquidity is going to be here, and this is why. so that you're getting a holistic view, a holistic understanding of not just where you should be looking for reversals and pullbacks and targets and entries and stuff, but also why. That's the important thing, right? Proper risk management, understanding why the market's moving how it is and how you can take profit from that, right? But that's not enough. You also have to understand, how do you actually trade it? And I spend a lot of time talking about that with our live trading sessions. You can ask these guys here, we'll put it on there and we'll say, listen, here's 2 proper risk management. Here's 2 proper places to put your stop loss. Now, why would you rather do it at this other stop loss versus the second one? And I talk about why. And usually it has to do with, because both are proper in terms of where you should look for, where you should be out of your trade. But one is going to have a higher stop loss, which means you're going to rob yourself of upside if it doesn't hit your stop loss. Second part being, if you're using the bigger stop loss one and it hits your smaller stop loss, right? If you're on the smaller one, you have a chance to get back in with a bigger return potential. If you have the larger stop loss, again, you're robbing yourself of that potential upside. That's what it comes down to. And the important thing about this, guys, is time and compounding are going to get you where you want to go when it comes to your money. You guys think a lot of times when you're trading as new traders, right? What you tend to think is, how much can I make on this one trade? It's always about the one trade you're on and how much you can make on it. But the reality of it is your culmination of trades over time. How many times can you consistently take in profit? Because that's going to build up your capital account, which means you're going to be able to get larger and larger position sizes as the future goes on, which means you're going to get larger and larger profits as a percentage, right? That's the goal. It's not about the single trade you're on. It's not about this trade today, guys, because you're going to get some great trades along the way and you're going to get some really crappy trades along the way. Okay? So stop worrying about the single trade you're on. Figure out your system and then tweak your system. And if you focus on your system and you focus on doing what you can do better with your system, your profits are necessarily going to get better and better and better. And time and compounding is going to bring you where you want to get to in terms of your capital account and wealth and stuff like that. Okay? This is what it is, guys. You're going to, most places you go, if you're looking for somebody to kind of mentor you or to teach you or whatever, most of the places, what they're going to do is they're going to maybe show you a technique or a strategy, okay? And that technique or strategy most of the time is going to be some rehashed nonsense that doesn't really work, okay? Most of the time, they're going to slack on proper risk management, okay? Beyond all that, very rarely is anybody going to explain to you why liquidity is forming on charts. Not just, oh, well, it pulls back as far, so it's got to form there. What's going on? What's the psychology? And if somebody tells you, listen, you guys need to hear this. If somebody tells you, because I talk all the time about psychology and human emotion, because that's what drives markets. But the response I get from people that don't understand and that don't know any better is, but stock market, for instance, is 75, 80% algorithms. Yes, but they are coded to this understanding. They're coded to how people tend to act or react, whether the coder understands that that's what they're doing or not. Okay? So most people have a tough time trying to explain how and why markets move like they do. They just say, listen, you're going to do this. And if it does this, you need to do this. And for most people, they think, oh, that's all I want to learn, because they don't want to really put any effort into it. They want to learn as quick. They think they can just learn in 5 minutes and they're going to be successful. And that's not the case, guys. And I tell you this because I want you to be successful. Do I want you to join TWC? I would love for you to join TWC. I think we have amazing freaking people in there. Was it Colton here just a minute ago said something? What'd you say here, Colton? Colin Kirby said, it's almost a liability. Oh, not to join TWC at this point. Yeah. Colin's in there. He knows. Ted, what's up, man? I agree completely, Chris. Since joining TWC, I've been improving my system, and this week I have my biggest week ever. And I wasn't even, look at that. My man had his biggest week ever and wasn't even trading today. He was trading on the sideways, slightly down this week. His biggest week ever. I love that. You need to make sure you share that over there in TWC, Ted. Let everybody else know, man. That is fantastic. Because a lot of people are going to get in there and go, oh, I made all my money today. And, and it's fine. But my man over there working with his system had his best week yet. And it wasn't even like our strongly bullish week or anything. I love that, man. Let me see here. So, yeah. So, again, this is what we attempt to do there. It's like what I'm doing here, but on steroids. Now, if you guys come here and you listen and you whine and you say, oh, you're being a jerk and you're saying mean things, then you aren't paying attention. I don't ever put traders down. Never. Because I remember how difficult it was for me to learn at first. And I remember everything I had to go to get where I'm at today, 30 years later. And it's only because of the things that I'm honest with you about here, guys. It's only because of those things that I was able to get here. There's very few people in the grand scheme of things, of those who actually enter the markets, that are around 30 years later or more. Peter Brandt, John Bollinger, myself, Fibbo, right? Because we figured out what actually works and what doesn't. And while we all may trade a little differently, the things that we all hold near and dear are proper risk management, number one. And two is an understanding of what people are doing. Even though we all look at it differently, it's all about this understanding of what people are doing. Okay? Does that make sense? And this is what we do all week long at TWC. Whether you're joining me for all the lives we do, the live trainings, the live tradings, you're going through the courses, you're discussing with everybody in the chats and stuff like that, whether you're following Andrew's analysis and his trades. My God, guys, if you are in TWC and you are not paying attention, Mr. Andrew Bennett is here in the audience right now. He's one of our head traders. If you are not paying attention to my man, you are losing out. This guy jumps up there, man. He's like a machine up there, right? And he comes up with some really great trades, guys, long before anybody else is coming up with them. And you get access to that. And you get access to Vince as well, our other head trader, right? And their analysis and their trades that they're taking and their setups and charts that they're looking at, their analysis. Okay? You also get access to Fibbo and his trades, and you get to learn his trading system. And of course, again, you get the trades I'm taking, you get the market wrap every night, you get the BMA update multiple times a day, which is the Bitcoin update. You get, I don't remember how many charts it is these days, 15 or 20 charts that are updated daily. The market wrap alone is like 20 charts. There's always something to look at and trade, whether you're scalping, day trading, swing trading, or investing. We've got chart request section. We've got a chart critique section. Use it. Come in, learn something. Put a chart out there. Start putting together what you think you're learning. Ask for a critique, and I can help you understand. Or I can be like, yeah, you've got it. Or, no, you're messing up right here. This is the way you should be looking at this so that you understand. There's nobody, guys, I don't think there's, from what I've seen, nobody out there that does all of this in all the different time frames. It just tries to be there for all of y'all. Not everybody's going to trade scalping. Not everybody's going to trade, do day trading. Not everybody's going to trade crypto. Not everybody's going to trade stocks or Forex, futures. We help everybody kind of figure out this is how you do all these different things, and this is how you go about it. Okay? Andrew, man, it's all on you, man. See, Andrew's like, I got to put this up here. Look at this. Andrew said, appreciate shout out. Owe it to you. Your teaching is by far the best I've seen. Thank you. Guys, listen, I appreciate that. I really do. But I am in no position to take away from what Andrew does. Andrew went in there, and in less than a year, he had it figured out, and he was making money consistently. It was because he wanted to do it. He went in there, and he worked hard, and he was consistent. And, you know, he showed up to the trainings and everything. I love to tell the Andrew Bennett story, right? Because Andrew used to just follow me online. And he would always be about wedges. That was it. That was his thing. Wedges, 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 wedges. And they always worked out well, right? But then he came and joined us. And all of a sudden, like, his mind opened up, right? And he still is great with wedges, still loves wedges. But now he's got so many more tools in his arsenal. And now he's able to figure out which wedges are better than others, right? Which are more likely to pan out and why. But I love it because he was doing pretty decently with the wedges on his own. But then he just came in and he upped his game and learned the things that we were teaching, proper risk management, all that kind of stuff. Jonathan's another one. Jonathan, man, my man from Belgium, that guy, he loves trading the shorter time frames. He's live trading with us and Sats and everybody, you know, 3 times a week. But he was doing all right before he came in. But he, you know, what he admitted was that he would get caught up, right? He'd do some great trades, but then his risk management sucked and he'd lose it all and whatnot, right? So when he joined us, his account was in the red. And within 5 months, he had gotten his account back up into the green. And he loves to post his trades and what he's doing on here. This guy's often getting 100 plus points a week. Just, you know, sometimes 100 points in a day, 80 points in a day, trading, you know, the MNQ, which is the micro E-minis for the NASDAQ, or the MES, which is micro E-minis for the S&P. But, you know, it's a testament to what we're doing, right? Alvin, another guy who really caught on with us. He's from Australia. And within a year, again, all these guys within 5 months to a year got it figured out, right? And they've remained consistent. Not that they've got it perfect, right? Nobody has it perfect. We still make mistakes. But man, Alvin went in there and he's got a couple of retirement accounts that he's trading right now. And he was showing us the results a month or two back, and just absolutely insane. But you know, what do all these guys have in common? They show up, right? They show up. They went through the courses. They showed up for the live trainings. They showed up for the live trading if they can, right? It's like anything else in life, guys. And whether you come to TWC or you go somewhere else, here's the key. You got to show up. You have to show up. You have to put in the effort. Consistency, discipline, effort. These are the things you need. No matter what you're trying to learn in life. It isn't special to trading. There is nothing you guys will learn from me as far as trading goes that is not directly applicable to every other freaking area of your life. Your relationships, your work, your job, your business, your kids, any other skill set you want to learn. Because it's not separate. Because we're human beings. We work in the same way, no matter what we're trying to learn or what we're trying to get better at. And they all require the same effort and discipline and consistency. These are the things that make it work. Okay? Got to show up. That's right, Roy. You got to show up. And, you know, sometimes people don't. You know? But listen, if you show up and you put in that effort and you do that work, there's little holding you back from doing what, you know, Andrew's done and what Jonathan's done and what Alvin's done and what everybody's doing, right? What Peter's doing, what Vince has done, right? What Fibbo does. Fibbo had to put in the time and effort and all the consistency and discipline and all that stuff to get to where he's at as a trader. I had to do the same thing. But I can tell you this right now, if you don't do those things, just like any other area of your life, you will not get the results you're hoping for. There's no way you can. Genghis Khan, what's up, man? He says, proper position sizing is key. Yes. And proper position sizing is a part of proper risk management. Now, of course, I have a whole kind of course in there on that, you know, at TWC that you absolutely have to go through. But here's the thing. Basically, it comes to this. Know where your entry is, know where your stop loss is, know where your take profit is before you get into a trade. And based on where your entry is and where your stop loss is, will tell you how large your position size can be. See, most of y'all are like, oh, I'm just going to throw $1,000 into this trade at this point. And usually you're way oversized. And when it goes back against you, that's why you get scared. That's why you're scared to lose a few bucks, because it's not just a few bucks. You're oversized. Usually you're oversized and over leveraged. But position sizing is always the last thing you do. You have to know all the parameters of your trade in order to figure out what size you can be. But think about it. The way you normally think as new traders is you're like thinking about the trade you're on, which means you're focused on how much money you can make on that one trade, which means you go back to your position size and you say, well, if I use this much, I can make this much profit. But if I use this much, I can make this much profit, right? Completely going at it the wrong way. And that's why you lose most of your trades, guys. It's not difficult to learn how to trade properly. It's really not. Now, it can become a bit more complex the more refined you get, that's fine. But to learn how to actually use proper risk management and trade appropriately, it's not that difficult. You can learn it pretty quickly. Okay? But you'll be more like a caveman, right? You're going to have wider swings. You're going to have more loss. It'll still be proper risk management, right? So you're not going to lose more than you should, but it'll be losing more than you could, right? And again, this is what I talk about when we do our classes each week, 3 times a week, is we'll always talk to them and say, well, listen, you can enter the position size here with this setup, or you can enter same entry, but put your stop loss here, same target. And this is why this one works better than the other one in this particular situation. And here's the things you want to look at when you're trying to consider which one should I do. Because both are valid trades, both adhere to proper risk management, but one may get you a 3R and the other one may get you a 11R. And if you can consistently make 9 to 11R versus 2 to 3R, what does that mean? Well, with time and compounding, you're going to get where you want to go in terms of the profit and the wealth you want to create a lot quicker, exponentially quicker, right? Not just 3 to 4 times quicker, but exponentially, because every time you go into your next position with a larger capital account, you get to make a larger percentage of profits. Or you get to make a larger dollar amount of profits, right? Because you're still working the same percentages. But maybe you get there in a half of the time. So it's not just about proper risk management, but that is absolutely the first thing that you guys need to learn, okay? Proper risk management. 2, you then need to learn not just where do I enter, where do I exit, but understand why. Because the more you understand about it, the stronger your conviction can be for your trade, which means the less likely you are to deviate from your plan and trade your emotions. 3rd thing is you got to understand, how do you trade it? It's not just simply, well, I'll put the stop loss here because it's proper risk management. If there's a better setup, what if there's a better setup where, again, you can make 3 to 4 times as much in the same trade? Well, you have to understand that that's available and how you find that and why you use that. But whether you come to us or go to somebody else, these are the things you need to learn, guys. Okay? Those are things you have to learn. But Chris, technical analysis is reading tea leaves. I know, people love to say that, don't they? Or they say astronomy for traders. It's so silly. Well, but we show you day after day, month after month, year after year here, whether publicly or in TWC, Peter, right? It works. It's no tea leaves. It's just an understanding of human nature. For those of you that don't understand, that's really what trading is. Understand human nature. I used to say this a lot. It's between fear and greed, right? All trading that you do oscillates between fear and greed. Okay? Let me kind of put me bigger here. The two biggest emotions are fear and greed. Of those, fear is the greatest emotion, which is why you tend to lose a lot of money, right? You have fear, it's not going to continue up, so you get out early. You have fear, it's going to continue out, it's not going to, or that you're going to lose money if you get out. So you let it continue going down, losing more money, right? Fear and greed. Fear is the biggest. Last week I was talking about this. I'm going to say it again this week. When it comes to trading, there are two things that affect your capital account. Okay. One is your profits, right? Two is your losses. Here's the thing. I already talked about fear being the bigger of the two emotions, right? Your losses, what you lose, has a greater effect on your account than what you win. Because the only thing you control is how much you lose. And most of the time, you aren't controlling it. Most of the time, you're letting it continue to drop down when you know you should be out, right? So if fear is the largest of the two emotions, fear and greed, and if your losses contribute more to the change in your account than your wins do, then where do you think most of your focus should go at the beginning? Proper risk management. I'm telling you guys, I didn't learn this at first when I first started trading, right? But I have learned that of everything I've learned over the last 30 years, what I just said is the single greatest factor in whether or not you are consistently profitable as a trader. Whether you become, see, I say successful as a trader, and what I mean by successful is consistently profitable. Okay? That's what I consider a successful trader. Not just one or two trades, not 10 trades in a row that you win. Oh, everybody does that every so often. But can you keep your equity curve going up like this year after year after year? How much did I start trading with? Geez, God, I think it was like $500. And that was back in 95. Yeah. You don't have to have a lot of money to be, to make a lot of money at trading. But you have to have time. You have to have patience. You can't be trying to make your target, turn $100 into $1 million in a month. You can't do that. All that's going to do is put the fear that you're not going to hit that target, right, into you, and that'll make you get into a whole bunch of different trades that you had no business being in to begin with. Roy says he started with 168 Canadian. But that's the big misnomer. People think they have to have a lot of money to do it. You don't. But the less money you have, the more patience and the better your risk management needs to be. I can't even say the better your risk management needs to be, because people will get in with a lot of money and then they'll just blow it. But yeah, you can get started with a little bit of money, guys, but you're not going to get rich overnight. And if you're seeing that on these crypto Twitter accounts, just understand most of them are lying to you as it is. And in the very few cases where they actually do make a good amount of money on a single trade, it's usually after they've lost a whole bunch on a whole bunch of other trades, or they'll end up losing all that money they made on that big trade. Because trading's not about the single trade you take. It is about your ability to remain consistently profitable over years. But again, most people, when we first come into trading, we come in with the short-term mindset, with this idea of it's easy, anybody can do it, and we'll be rich soon. We can turn $100 into $1 million overnight, or maybe a week. Right? You're not going to do that, guys. You're not going to do that. So again, thinking about everything else I've said about risk and about fear and about proper risk management, And now I'm saying you're not going to get rich overnight. So if that's true, and yes, it's true, again, where do you need to focus as a new trader more than anywhere else? Proper risk management. Once you do that, and you have an understanding, not just of how to do it, but why you do it that way. Like I teach it a specific way, and I explain to you why we do it this way. So you're not just following the rules, but you're understanding why the rules are there. The more you understand about something that you're doing, the less likely you have fear in it. Okay? You might be scared to fly because you're talking in a big metal can 20,000 feet in the air, right? Whatever it is. Shouldn't work. Bumblebees shouldn't be able to fly, right? But the more you understand about physics, about wind flow, about the design of the craft, and how it's designed, and the flaps and the wings allow the plane to rise and to fall, right? The more you understand about that, the less fearful you are about actually flying. That doesn't mean you'll be 100% non-scared of flying, but what it means is knowledge reduces fear. Not just in trading, in everything in life. The more you truly understand about a thing, the less likely you are to let your emotions dictate what you do with that thing. But here we're talking about trading, right? Here we're talking about trading. And so with trading, that's the key, guys. Don't just, but again, that goes different than what we think when we first come in. We're just looking for somebody to say, listen, this is how you trade. Give us 4 things. Do this, 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 and this. There you go. And we don't have to think. We just have to do that, right? Or tell me where to buy and sell. Tell me where to put my stop loss. Well, the problem is I can tell you where to buy and tell you where to put your stop loss and tell you where to do your take profit. But the odds are you won't allow that stop profit to stand. If price is coming against you, either you'll get out before it or you'll take it away so price can fall further because you're scared to take that loss. So that's the other thing we focus on a lot when I'm teaching over there at TWC is here are the emotions. This is why they're coming out. This is what you need to think about and how you need to start working yourself so that you get away from those emotions. Because you'll never not be emotional, guys. You're human beings. Part of being human is to be emotional. Right? Is to have emotions. That's part of being, that's part of what it is to be human. So you're not going to ever get to that point where 30 years later, you won't be emotional when it comes to markets. You're still going to get excited. But you're going to have more experience holding yourself back, right? Waiting for the time to enter versus just jumping in because you're excited and price is going up. Waiting for a setup that makes sense where you have an entry and a stop loss and a target that makes sense. You have patience that allows you, with your setup for price to hit your stop loss if it has to, right? So these are the things. So when it comes to trading, right, your biggest obstacle is yourself. That's legit. It's not Wall Street. It's not crypto whales. It's not some guy on CT who said on crypto Twitter or social media elsewhere that said, hey, listen, you need to buy here, sell here, stop loss here. It's none of their fault. You're the one taking the trades. It is 100% your responsibility if you're successful or if you lose money. But also the other thing here, guys, let me end on this. I'm going to get out of here. But don't allow your loss to define you. Your losses in trading do not define you. Losses are part of the game. The only guarantee there is in trading is that you will lose money from time to time, no matter how long you've been doing it. And the newer you are, the more money you're going to lose, the more often you're going to lose it. Because you haven't learned proper risk management, all these other things you need to learn first, right? That's the absolute only guarantee in trading, though. Other than that, everything's a toss up into the air. You don't know whether the trade you're in is actually going to go in the direction you want it to, much less hit your target. Now, you learn these things that we teach and others teach, whatever, to hopefully help you estimate better where you should be entering, where your stop loss should be, where your target's going to be. But none of that's a guarantee that it's going to happen. So don't let your losses define you. Learn proper risk management and come to terms with the reality that you're going to lose money as a trader. As long as you're doing proper risk management, you're losing so little at the end of the day that it shouldn't be an issue. Emotionally, it shouldn't really be an issue. But, again, you're going to have emotions. They're going to be out there, regardless of how long you've been doing this. And you're still going to make mistakes. But even some of your trades that you get losses on won't be bad trades. They're the right trade to take. They're the trade you've got it set up just as you would expect it, as you should. It just didn't work out. That happens. So don't let your losses define you, because that's just going to stick you in this terrible place emotionally that's not going to allow you to learn from it and allow you to get better. And you're going to end up repeating that same mistake. That's the one thing I see with most of new traders is, well, first of all, they don't know proper risk management. They have trouble accepting responsibility for the choices they make, not just in trading, but in life, right? It blends over everywhere. And in doing that, the big issue is they never actually learn from their mistakes. So they keep repeating those same mistakes over and over again. And then they just kind of put it on, Wall Street or crypto Twitter or crypto whales or whatever. It's always somebody else's fault. But again, the big catch with that is if it's always somebody else's fault, that means in your mind, you don't have to learn from whatever mistakes were made. And you don't. But you'll keep repeating those same mistakes, okay? All right, guys, I'm going to get out of here. I'm biting my tongue a lot. I don't know why. I think it's starting to get kind of swollen here. But I hope you take a lot of this into consideration as you're learning to be better traders, okay? Because this is the stuff, what I'm talking about, this is the stuff that makes the true difference over time. This is the stuff that really kind of defines whether you've got a chance to be successful, to be consistently profitable as a trader or not. It's not how well you can learn Elliott Wave or something. It's this stuff here that I'm talking about. The rest of that stuff is going to help you refine how well you do. But if you don't have this stuff figured out and committed, you're going to struggle with trading forever. Okay? Hey, listen, man, we'd love to have you all there. You can join us at members.texaswestcapital.com. Again, you get everything I mentioned earlier, and we're always trying to add more stuff as we go along there. Sometimes it works out. We keep it in. Sometimes it doesn't. We get rid of it. But you get at least all of that stuff. But you can jump over to members.texaswestcapital.com, texaswestcapital.com, members.texaswestcapital.com. There we go. Said it. And if you join for the, we've got multiple things you can kind of sign up for there. But if you join the Liquidity cartography, we still do actually have a few more spaces left. There might be 2 more, maybe. I think it's about where we're at. Because we only opened 20 seats to test this out. But we're giving you the code 2X, TWOX, to get 50% off the annual. And as long as you do the things that are required there, if at the end of the year, you aren't a better trader, you aren't a measurably better trader, we'll give you double your money back. So it really is as simple as that. So we'd love to have you there. And if you join, say hi, guys. I send messages to everybody when they join. I hear just back from a few. And the other people, we're not seeing them show up in the chats either. Make sure you guys are, replying back. Jump in the chats. Talk with these other guys that are there. They've learned that these discussions are what help them continue to get better and better and better in a quicker way. So jump in and do it, all right? I hope you all have an amazing weekend. You trade safe out there. Again, with Bitcoin, my initial thought would be with as big a pump as we've had today, that would probably have a pullback through the weekend and then maybe continuation on Monday. We'll see how that goes, how that works out. But yeah, there you go. I'll be back next Friday, guys, and we'll see how that week goes, all right? Y'all trade safe out there. Remember, the only thing you control is how much you lose. So please keep working on that risk management. I hope I've convinced you today how important it is if you're not convinced yet. If not, please keep coming back and I'll do my best to convince you. All right. Y'all have a great weekend. Trade safe out there. Take care. And hopefully I'll see you over there in TWC.